I'm not going to waste any time here. So you know that we usually start with the stock of the day, but given this is a special edition, I thought instead I want to make sure I get a buy from both of my expert guests. So we've asked our guests to give us one international stock pick that they would buy for the long term. So one for the bottom drawer, maybe for the kids' uni fees, or even to help them with their first home. I don't know, that's personal, but all we want is a company that really stands out as a long-term quality hold with lots of potential upside. And Charlie, because you're here with me in studio, I will start with you.
Oh, well, there we go. Now, there's a lot of pressure on here today. We've got a new format, new ideas, international shares. 98% of the world that isn't Australian equities.
Exactly.
So if you ask me, look, you asked me for one thing that, you know, we own in the fund, I suppose, rather than a buy. If we own it in the fund, we bought it, right? And it's a big weighting in the fund. Something I think that could do well for people over time, and a business that'll be around in 20 or 30 years' time when people need you know, to see what the result of this idea is. It's actually Nike. It's a very well-known global brand, you know, king of athleisure wear. But I just think it's a wonderful, wonderful business, you know, really backed by a couple of big trends, mainly the trend to athleisure, health and fitness. At the moment, it's seeing a little bit of interruption from supply chains. Obviously, the Port of Los Angeles is a problem for Nike, as it's a problem for everyone. And there's obviously COVID cases in Vietnam where they do quite a lot of manufacturing. So it's been a bit of interrupted at the moment. They maybe don't have the greatest Christmas. But if you're a long-term investor, these are the opportunities you need to seek. So for me, something like Nike, other than being a great brand and great thematics below it, it's actually also a business transformation story. It is cutting out the middleman. It's trying to go direct to you as the customer, cutting out all those sort of small you know, shoe stores and things that have a small range of Nike shoes and many other brands, all trying to go digital and taking much higher margins along the way. I think eventually you'll just order your shoes from Nike.com. They'll know exactly your size. They'll know where you live. They know what you do running or whatever, or you know, or Pilates or whatever it is, and they'll try and sell you a T-shirt as well. So for me, Nike is a wonderful, wonderful global business, being slightly interrupted by the issues of today, which is supply chain. But that's one I can see us holding, you know, hopefully in 20 years' time. And if I'm around in 20 years' time, it's probably because I use my Nike shoes to stay fit.
Yeah, good point. And 19 consecutive years of increasing payouts as well. Now, David, I know that you're also on Team Nike, but you have another company that you think is going to be a long-term quality hold. What is it?
Absolutely, yes. Totally agree with what Charlie said about Nike. But yeah, the stock that we like from a longer term perspective is Disney, or Walt Disney Company, ticker code DIS in the US. Obviously, it's been around for a long time, and we think that it will be around for a lot longer. It's a company that's had an ability to transform. It used the pandemic, or the timing of the pandemic, to launch its Disney Plus platform. We have actually seen the shares come down recently in the last couple of days because it disappointed the markets in terms of its subscriber numbers. It only added 2.1 million subscribers in the last quarter, which was disappointing to the Wall Street analysts. But they now have 179 million subscribers on that Disney Plus platform. And the thing about Disney is that it's been able to use that platform to distribute its movies when we're all at home. And it's now transitioning to a hybrid where they'll still release blockbusters in the movies, but then there'll also be pay-per-view and subscription services. And the thing that Disney has done over the years is really build its franchises. It's obviously got the theme parks, which is a bit of a reopening theme at the moment as the world reopens and people will look for activities to do as we head into Christmas and the new year when there's a lot more travel. But it's also added franchises such as Star Wars, Marvel to its original Disney platform. So continues to build out its content and is able to leverage off that content to deliver more services and deliver more content. So yeah, we like Disney. For long-term investors, the share price decline in recent weeks is probably a longer-term benefit, and yeah, we think that'll be around for a long time.
A buying opportunity, you could say, and it says that it's going to be making moves into the metaverse, which we know is all the rage these days, even though, I mean, I don't know. But we're going to move on from that. Thank you for that, guys.